Hey everyone, and welcome back. So this week we had a lot of companies report results for the most recent quarter, and we're going to have even more reporting next week, the week after that, etc. So earnings season is still not over, but this week we had the bigger tech giants report earnings, and that's what I wanted to focus on in this video. So let's dive right in. Up on the screen we have Alphabet or Google, whichever you prefer, and obviously their results were not that great. Now, I wanted to start off with Alphabet because their ad revenue is slowing down at a pretty tremendous rate. And this is key because a lot of tech companies, they rely on ad revenue, especially your social media companies like Meta, Snapchat, TikTok, etc. So the fact that ad revenue is slowing down is not a good sign. So investors were not impressed with that, and that is something we need to keep our eyes on going forward here, because should that ad revenue continue decreasing, you're going to continue to have more downward pressure on the entirety of the tech sector. So keep that in mind. Now, Microsoft, they had more of a mixed earnings report, but still was not that impressive. They beat on some expectations, but missed on a lot as well. You also have to remember that a lot of these expectations were already revised lower because a lot of analysts were anticipating the slowdown already. But the fact that Microsoft and other companies missed on those already revised lower expectations, that is not what investors want to hear, so they got punished accordingly. Then there's Facebook or Meta, again, whichever you prefer. This one is the big enchilada. They fell around 25% in less than 24 hours. And again, this is a blue chip stock. They are burning cash at a very concerning rate. In fact, should they continue at the rate that they're going, they could go bankrupt in a couple years. And again, I've had a lot of people tell me that Facebook is too big to fail, yet this chart says otherwise. This is probably one of the biggest drops I've seen in a tech company after they reported earnings like ever, especially of one of this size, because it's, again, worth hundreds of billions of dollars. So this is a very big company that just fell, again, about 25% in less than 24 hours. So this is pretty shocking. It caught a lot of people off guard. Now there's Amazon. Amazon, also very big company. They fell a lot after hours, as much as 20% at one point. And, I think investors should have seen this one coming, though, because Jeff Bezos, who's obviously no longer the CEO, but he still tweets every once in a while. But Jeff Bezos, last week, I believe, he had posted a tweet saying, "Ban down the hatches." I mean, that's not the only thing he said, but he mentioned "ban down the hatches." And this guy, he knows a thing or two about recessions. He's been through like two major ones, the financial crisis and the dot-com crash. And when he says things like that, which again, he doesn't tweet that often, but when he says things like that, people should listen, and it's clear why. Because again, Amazon, they had a pretty big drop. Now, they reported yesterday, and you would think that with all these bad earnings reports, you would have some pretty red markets right now. But taking a look at the markets today, you would have no idea that any of those bad earnings reports had come out. You would think, oh, they must have done great. But no, that's not the case. And there's a couple factors here why. The first one I will go over is the fact that Apple here, who also reported earnings yesterday after Amazon, they pretty much saved the markets because their report was not that bad, but they also guided down just like everybody else. So they're already forecasting that sales, revenue, everything is going to slow down in the months to come. But on their earnings call, Tim Cook, he kind of talked up everything, all the results, and he lifted confidence somehow. So after hours, Apple had dropped and then come back, so it pretty much ended flat. And then today, it went up as much as 8% at one point, now still over 7% as of the close. And this company is worth $2.5 trillion. Like, this is the largest valuation for a company in the entire US. So, I had a feeling that Apple might pull something and stop the apocalypse we were about to see forming in markets yesterday because it was looking very bad. And then Apple came in, swooped in, and just kind of cleaned up everybody's mess and eased fears about any type of crash, because at the rate we were going, that's pretty much what we were going to have. So Apple pretty much saved the day, and they helped uplift the markets. Now, is this sustainable? No, not at all, because again, they guided down. So the company already acknowledged that we're going to have a slowdown. And Apple's products are not cheap, right? Their iPhones, their MacBooks, it's all extremely expensive. But people are still buying them, and people are still spending. And, you know, I was like confused. How is this still happening? Because as we are aware, the economy is entering into a massive slowdown, especially with these interest rate hikes. But then got some news that credit card debt in the US hits all-time high of $930 billion. Might as well round it up to $1 trillion, because that's where we're headed. And then it made sense. You know, inflation has been eating away at their wages, at their savings. So when they have nowhere else to turn, they start swiping their credit cards. And people are swiping them left and right still. So this is what's supporting all the spending. This is why you still see lines out the door at the Chick-fil-A, or why people are still driving and traffic's really bad even though gas was like $5. People were still spending, and they were using credit cards. So this is going to persist for a little bit longer, I would say, but we are already starting to see signs that delinquencies are on the rise. Now, the rate of delinquencies is still lower than 5%. However, we are starting to curve up here, and the quarter-over-quarter change is increasing exponentially. So this is something that we need to keep in mind as well, because as we keep going on with these months, you're going to have more delinquencies, and people are not going to be able to keep up their usual spending habits because, you know, again, they just don't have the money, and interest rates are headed up even higher. So how are they going to pay all this off? Whatever people are doing, they cannot continue spending as much money as they are. And that includes like spending $1,400 for a new iPhone every single year. So that is going to change a lot of things. And as a result, I don't believe that anybody should be taking this movement in the markets, especially with Apple, with the belief that it's going to be able to continue somehow. I just do not see it. But again, Apple's not the only reason why markets were able to rally like they did today and, you know, for the past couple of days. You also have yields which backed off. If you remember last week, I had posted the video on the bond market, and at that time, we had almost reached 4.35% on the 10-year yield, which was crazy. And then this got walked back, and you know, it was to be expected because, again, nothing ever goes up or down in a straight line. So the yields got walked back by a pretty good amount. But as you can see here, we're starting to creep back up here. But this gave the market some breathing room, and as a result, we were able to go up here. On top of that, you also had some politicians like Sherrod Brown here and Hickenlooper, which, again, it's worth noting that they're all on the Democratic side. They sent letters in recent days to Powell basically telling him to stop hiking rates. Like, you're going too fast, you're gonna break something, and we got midterms coming up here, you're gonna make us look bad. So basically they sent these letters out in desperation. And then you also had BlackRock economists come out saying that there's going to be pivot language at the next meeting, which is next week. But they're saying that we might have a change of tone as to what the Fed is going to do. Now, all of this, again, is ahead of the midterms. And obviously now there's political pressure on Powell and the Federal Reserve to change their stance a little bit here. And we've been getting some notions of that in the week prior as well. First off, if Powell pivots now, like next week, so if Powell pivots next week, before the midterms, it's going to look like he bowed down to political pressure. So actually those letters sent by those politicians did more harm than good. He would be more incentivized not to pivot, to actually continue with the plan and maybe go even harder. I don't know. But that is one reason. But the second reason, and most importantly, is because he knows that if they pivot, the markets, not only will the markets just shoot up instantly, but you will have commodities go gangbusters. So I'm talking natural gas, oil, food, and all of these things are already expensive. But if they pivot now, it will get even worse and it will undo all the progress that they made, essentially. So they can't. I don't think a lot of people realize that these people cannot do what a lot of investors and politicians want them to do. Again, this is the break evens for the long end of inflation. We've shot up straight this entire month. And that is something that the Federal Reserve is aware of. They're looking at this and a bunch of other metrics out there, and they see that inflation is a lot stickier and a lot persistent than they initially thought. So pivoting right now, it's not in the cards. It's just not. And the last chart I want to show you and leave you with is this. This is the skew index, and again, most people don't know what this is, but all you need to know is that historically speaking, everybody and their mother are buying stocks. So, again, I've heard a lot of people say, oh no, everybody's too bearish, everyone's too pessimistic. No. It's the other way around. Everybody is too bullish. Remember how I said that they are not going to pivot unless there's some sort of panic? Well, this is not what panic looks like, and we are a long way from there. Anyways, that is it for me. If you guys have any questions or comments, feel free to reach out. Please like, share, and subscribe, and I'll see you all in the next one.